Welcome, guys, to another weekly webinar. Thank you so much, first and foremost, for coming out. I really appreciate it, guys. Let's pull that out there. And so, sorry again, guys, about earlier, just in the last 5 minutes, I was going through some of the charts, just trying to refresh them and fix them up. Reason being, guys, this TradingView, my account has been finicky lately, and so a lot of my analysis that I'll do on Sunday is not saving, and so you'll see a lot of outdated levels and things of that nature. And so typically speaking, I'll just go back and redo them again. And so I never got a chance to until actually just now. And so bear with me, guys, because all the other levels for the most part should be correct. But in the end of the day, all we really care about is looking at structure, right? Levels are just indications, just as trends are and stuff like that. We're really looking at its environment in which way we're going to move. And so bear with me on the dollar index with some of the levels, but all the other levels are quite good. And so welcome, guys, to my weekly webinar. And so my name is Albert, if you guys do not know me. And how I construct these webinars is what I do is I go through all the dollar pairs except the Swiss franc, simply for the fact that that is not a pair that I do like to trade. And from there, what I'll do, guys, is I will break down the structure from a longer time frame perspective as well as a shorter time frame perspective, giving you guys outlooks all the way from where we could expect price to move within the next 2 to 3 months, as well as where price can move within the next 24 to 48 hours. In addition, guys, I do host Q&A at the end. And so if you guys have any questions, please hold them to the end. You guys can put them in the group chat and then I'll see them after. But with that, guys, I will get to all of your questions after I get started. And so I'm going to take a sip of water and then we will get right into it. All right, guys. All right. So we are in a pretty interesting environment as of right now, right? And I've been saying for the past couple of weeks that you really want to be careful of what's been going on with dollar index as of right now, right? Simply for the fact that when we broke out of this range, right, it was apparent that, in fact, we should make some type of bullish movement. The question was how big of a bullish movement we were going to make, simply for the fact that the entirety of the structure sitting up into this point where it is right now is still bearish, right? And if you guys go back into some of my past YouTube videos, I do state that, that 94.15 handle was most likely where dollar index was going to push through. And then from there, it's really going to be up to A, can we get a catalyst to give it further continuation to the upside, right? Or B, at some point, this is going to start breaking down. And once we get that break of the low at the 92.22, from there, that's going to initiate the downside play and potentially just warrant this entire movement as a bigger term correction, but more importantly, relief, right? And so critical areas that we're in as of right now, guys, right? And so shout out to all of you guys that have been treating the dollar pairs very short term and have been moving your stop losses as quickly as you possibly can. Now, that's not to say it's the same thing when it comes to the crosses and the exotics, simply for the fact that, those pairs tend to be a bit more impulsive and erratic. And so you can potentially swing those or even trade those a bit more comfortably than maybe the dollar pairs as of right now, simply for the fact that where we were in reference to nature. And so what we'll do, starting off with the monthly, guys, is let's take a look at what dollar is showing us. And like I said before, guys, and I've been saying this for the past weeks, even though I was saying that you want to be quite careful in what's going on with dollar, this trend did not validate that bullish push. Rather, it makes sense why structure started pushing to the upside, simply for the fact that this was quite a strong impulse to the downside. So at some point we needed some type of liquidation or profit taking. And so looking at as of right now, where is dollar going to move for the next coming months and potentially next coming days? And so looking at it as of right now, right, we can see on the monthly time frame that dollar is definitely at a critical handle, right? We can definitely see that we broke down that area in the past coming months, sitting right around here in the start of 2017. And now it looks like we are coming back to potentially retest that area or potentially break back into that area, warranting a potential buy all the way back to the 100 number. Now, one thing to be careful, guys, is that this is very critical, right? This is where people end up blowing up accounts or potentially get beat up for the fact that they don't understand what type of environment that they are in. And it's very important, guys, that if you're not aware of the environment that you're in, that you simply just sit back and watch, right? There's no point of actually being in the markets. And so, looking at it as of right now, in reference to the monthly time frame, and you really want to look at, okay, so where could dollar potentially be moving and what's going on? Well, some would be like, well, we got this break in the head and shoulders, right? Shouldn't we continue to the downside, right? And, remember, patterns are just mere indications. At the end of the day, you have to move with the markets, right? And, it's important on how the market's forming, but, one could also argue that, this is potentially forming, an inverted head and shoulders to break back to the upside, right? And so let's look at it from just a mere price action perspective right now, working on the monthly time frame. In fact, we have been some type of bearish momentum, start of 2016, relieved a little bit in continuation in 2017, leading into 2018, we started to relieve once more. So the question is, what is going to happen? As long as this 94.15 handle, in fact, does hold, you're still looking for downside on dollar because of this initial impulse to the downside. This would be relief, and you would look to run it back to the floors, right? If, in fact, you see one more break above that 94.15, you guys can say, you know what, Albert, we are starting to look for that buys, and we are going back to the tops. And so in reality, it's going to be based on whether dollar can really get enough strength to start breaking back to the upside. And as of right now, dollar doesn't look like it's slowing down. Now, we are seeing less pushes in reference to the weekly candle as of right now, and it's definitely not as strong. FOMC meeting minutes that happened today didn't really cause any type of significant change or impact within the pair. And so as of right now, this is what we see. We see a previous low that was broken. We are now seeing the false breaks, potentially creating that inverted head and shoulders pattern that we were talking about. But more importantly, giving us indication that, the bears, they might be having some tough time right now, trying to gain some further momentum. Now, one thing to take into consideration is that we are treating this as just correctional relief right now, right, guys? Because you have to look at the entirety of the structure. Remember, first things first, right? This is range bound, right? And that's a given. So in reality, you're just playing the tops and the bottoms. If you guys want to go back to my older YouTube videos, you guys can see that in the past 3 weeks, we said, look, we are reversal bound, right? And we are stating that at some point, we are expecting dollar to reverse. But at the same time, dollar does have a possibility just to continue to push up to the 94.15 handle. And then from there, it's going to be a game of deciding, do we break out and continue to the upside, or do we start to decelerate? At some point, we'll get one strong impulse followed by some type of continuation pattern, and that will warrant, the push all the way back to the downside. And so we are in a very critical area right now. The question is which way we're going to be moving. And, to be quite honest, guys, that's going to have to be based on a catalyst, right? Nothing technically is going to cause this pair to break out, but rather someone's got to see something, or someone's got to say something or do something. And so looking at it as of right now, in reference to the bullish movements, you're quite limited on how much you could do, but still opportunities, simply for the fact that if we look at the daily time frame right now, we can definitely see that there is further bullish momentum to the upside, in which dollar does look like we should continue to break past that monthly resistance. But one thing to take into consideration, as all my students know, we can see that dollar is in fact creating some type of a reversal pattern rather than a continuation pattern. For those who don't know what the difference is, a continuation pattern starts with a sharp impulse to the upside or a sharp move, followed by liquidation or profit taking, or one could call that a flag, whatever you want to call it in the end of the day. And what you're looking to do is take this impulse and get continuations of it, and that starts to create your trend, right? Low, high, higher low, higher high. That starts to form a trend, right? But instead, we're not seeing that in reference to what happened with dollar here. And so with that being said, right, we want to be quite careful on what's going on. Is that to say that, because the pattern and what's forming in its environment is going to happen indefinitely? Absolutely not, right? Dollar could simply just continue to go, 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 go. And you know what? All we could just say is, you can't be surprised, because the basic, the basic nature of or notion of trading price action is first things first. You're trading with trend, right? Trend is your friend. And so regardless of what I'm saying in reference to dollar, it looks like it's forming. You're still looking for longs as of right now, unless dollar gives you any other signs, to look the other way. And now one thing to take into consideration, guys, is that the buy is definitely limited compared to the sell. One thing to take into consideration is that you are at a very strong area, hence why when I sent the EU signal out, which we're going to be reviewing, I did mark it as an aggressive trade for two reasons. One, we did have FOMC, and two, dollar is at monthly resistance. So is EU sitting at monthly support. Therefore, we are playing with fire and a tremendous amount of pending orders, right? And so with that being said, marked it as an aggressive trade. EU, I believe, pushed 20 pips, 10 pips, or like 25, 30 pips, 10 pips away from take profit one, and that's okay. But hopefully traders were able to manage that position, as they could have either A, closed that trade for break even, B, closed for a small profit, or simply C, kept the same parameters and still run the trade. And so that's why as of right now, bullish versus bearish, right? I would prefer to be bearish on dollar for one reason, right? You get this impulse, you get this continuation pattern, you get another impulse, but failure. Now we're getting this type of reversal, right? And so, the downside is so much higher than the upside, but I'm not going to knock the upside if there are potential opportunities. And so looking at it as of right now, let's just leave it in its current instance. Two ways that dollar is going to play out, right? You're either going to see another breakout to the upside, followed by some type of small continuation, and this thing's going to try to tag the tops, right? If it can't get its momentum and you just start seeing wicks there, right, eventually that's going to start breaking to the downside, and that's kind of the trades that you want to look for once these lows do in fact break. But the safest trades, to be honest, playing dollars, watching for a daily break above that. You get that, you look for a continuation pattern and run that back as far as you possibly can, right? Now, if that doesn't happen, where's the first initiation trade that we're looking to take, right? And it would be something around here. Reason being is because this is the last low of this ascending structure, right? And so once we in fact start to create lower lows, right, it is telling us that short-term dollar index is switching its momentum from bullish to bearish, right? Not long-term. I said short-term simply for the fact that you do want to take into factor that initial impulse followed by creation of this 92.22 low. And so therefore, that is really what's going to warrant the difference between switching momentum or continuing in this bullish stance. And so going back into breaking that low of the 93.28 handle, right, one thing that you're going to want to see, actually, it wouldn't be 93.28. It would most likely be, guys, 93.38. But regardless, within that given area, once we do break, once you see lower lows, look for a small type of continuation pattern flag and look to run that all the way back to the downside to the 92.22, and that will most likely be a nice trending play all the way back down. Now, one thing to take into consideration, guys, is I did state that this is going to be the battle between the buyers and the sellers, just like the tops of the battles between the buyers and the sellers right now, as of right now. So with that being said, you're either going to see, okay, continuation back to the downside, right? Or you're going to start to see slowed down momentum, create some type of reversal pattern, and once this breaks out, starts creating short-term higher highs, that may be a warrant for another continuation back to the tops, which might be potentially riding that initial momentum followed by that one there. And so looking at as of right now, guys, really two ways are going to happen in reference to dollar, right? Either A, you're breaking this 93.38 handle and you're looking for that downside play. That's your trade right there, and this becomes your descending trend, right? Once that occurs, be very careful here. Either wait for another strong impulse to the downside, followed by some type of continuation, and that is your trade all the way to the downside. If that doesn't happen, guys, right, and this does start to slow down near here, right, start to create some type of reversal pattern rather than continuation, look for a breakout, short-term higher high, and that's your long bias. And this is only stating when that initial sell does break out. Now, failure to do so, and let's say this just rallies back to the downside, could create another short-term relief once that breaks out. Run your trade back to the top, stop, smooth, break even, and give this a shot. Remember, the big bias is not warranted until, in fact, you see an impulse followed by continuation above that monthly resistance. And from there, you can start looking for buys. The safest play on the dollar for the buys, waiting for a daily break around the 94.15 handle. If not, be quite careful, right, guys? So you got either that one, right, or you got this. So that in reference is what's going to go on to dollar index. And so pulling it to EU as of right now, you're going to see the exact same thing, right? And so looking at the monthly time frame, same concept. People are like, oh, Albert, how could you miss that, right? It's the trend that caused this, this push to the downside, right? And it's, if you understand, just the notion of a trend, you understand that a trend is a consistence of highs and lows, but not a straight line shot. And so with that being said, it wasn't necessarily the trend that caused that to push that down, because one could also argue that, this previous low was the issue that caused that trend to be pushed down, right? One could argue, that there was a tremendous amount of pending orders within there, right? One could argue that this was the impulse. You saw another impulse. This is just warranted as relief in the initial structure that pushed to the upside after breaking out of a 3-year range of consolidation. And so in reality, right, there's so many variables that you could warrant into reference why this bearish momentum happened, and rather you could just simply say, you know what, the moment it created lower lows on the weekly time frame, that's when in fact we signified the bearish momentum. Same concept about the 01 and 08 recession, right? I go over this with a bunch of my students now, and I show them how the technical traders were already in the crash and just waiting for the for the bigger players to start pumping in cash in there once they start seeing some type of economic flaws. And so same concept here in EU. It's not the fact that EU was being forced to, be pushed to the downside because of this descending trend. Because let me tell you something, guys, this is the impulse. This starts to create a continuation or a flag pattern. If this broke out, you would have saw a huge impulse to the upside. So I love when people are like, if you didn't see that trend, you don't know what you're doing, you don't know what you're trading, right? And it's, if you understand the nature of the game, you understand that, trend just consists of a tremendous amount of pending orders. And so therefore, we just know that since the game's automated, we know algos are going to be buying and selling off of that. We just want to be aware of it. Hence all the wicks. But going into where I believe EU is going to be moving, once again, guys, we did state that EU should be returning to the 118, 117 handle regardless if we were reversal bound. We were stating that it could make one leg right straight back down to there. Now we're in a very interesting scenario, and check this out, guys. There's a couple of ways that EU is going to break out. If structure continues to break to the downside and you start seeing the weekly breaking through that, we'll probably continue all the way back to the downside. Now, if that doesn't happen and we start to see some type of deceleration, that's going to break out, right? Now, the interesting thing is that when this breaks out, right, the question is, how long is that going to break out before? And let me tell you why. Because there's a couple of different scenarios that can form out. If this starts to slowly pull back, right, and it creates some type of just short-term relief, then this is what's going to most likely happen. This will be warranted as relief, right, after that impulse, which will create a bear flag. And at the same time, that'll start structuring out this head and shoulders pattern and this 117.12 handle being that neckline. And once that does break, that's going to be the big impulse all the way back down to parity, right? But if that doesn't happen, right, and instead this impulse starts really going, right, then you know what? We are definitely bullish to the upside and you're looking to run it. So it's going to be all dependent on how we react within this area, right? And even if we start to slow down and we start to break out, the breakout is what you guys really want to be interested in. How big and strong is this breakout going to be? Because it's going to warrant, you know what, are we coming here? We're going to retest. That's going to start creating my descending trend for me. And then you know what? That's going to be my first sell. Once this breaks, that's the completion of the head and shoulders, and we start running it to the downside. And that's the big question. That's really the big question in the end of the day. It's how big, can we expect a movement, in reference to the push. And so looking at euro to US dollar as of right now, very critical where we are. Pulling it to the daily time frame, guys, you guys want to either see a couple of different things within structure as of right now. So either A, you want to see structure, right? You are seeing some type of impulses, right? And so with that being said, what we want is we want reference to EU, guys, is there's a couple of different ways that euro to US dollar is going to play out, right? So either A, when structure starts to get into this environment, what's it going to do? Is it going to slow down, right? And if it does, like I said, then you're going to get the breakout. But the question is, how big of a breakout are we really going to get, right? Because this could have been treated as relief if we start to break back to the downside. And so once we start to slow down here, if we start to break, this is really the big question. Where do we go? And ideally, this bullish target that you run should really be limited to about the 121, 122 handle, because that right there is going to decide, you know what, was this false or not? And if we start to continue to push, that's false. That's your run all the way back to the upside, right? So that's why you're going to be treating, regardless of whatever bullish momentum to the upside, as short term or high risk exposed, simply for the fact that we don't know how long that bearish run is going to be. Because like I said, guys, the environment is definitely changing. I didn't expect structure to be pushing so aggressively to the downside. And so that impulse is going to be so important to tell us, which way are we going to be moving. And so looking at EU as of right now, guys, there is a couple of different ways, right? Let's start off. We see initial impulse to the downside, then we see relief. Now we see continuation down. But what do we see now that's different? We do see that structure is creating somewhat of a reversal pattern rather than a continuation pattern like we saw here. And so the question becomes now, do we continue or do we start to reverse, right? And so if we start to consolidate and reverse, we shouldn't be surprised, because we are in definitely a territory where pending orders from the bullish stance are going to be sitting, right? And so if we in fact start to falsely break this low, that might be the first initiation that we could potentially start to rally back to the upside, being this short-term bullish movement to the top. Stops move to break even. Once you get to the neckline, that creates your inverted head and shoulders pattern. And once that breaks out, that is your rally all the way back to the upside. So that would be the bullish movement, right? Now, let's say these lows do in fact break. Now, look, we are already in the signal, and I'll tell you guys why we pulled the signal. But if structure does start to, relief or start to pull back, right, what we're going to expect is one more break out of that flag, and you can get another push straight back to the downside. Stops move to break even once you get to the lows. But why did we signal the trade? Okay, so looking at it as of right here, guys, we can in fact see that structure did in fact break below this weekly support, which is what I wanted to see, right? And in fact, what I also wanted to see was just this wick in fact being broken, and we can see here that we did break, and then from there create somewhat of a beautiful retest in reference to that low. And now that's why I ended up pulling the trigger, right? Was I aware that this was forming? Absolutely, right? Did I think that we could get the push to TP1? Absolutely. Did we get there? No, we missed it by, I think, like 10, 15 pips max, right? And so, you know, we did have FOMC, which is why it was warranted as a higher risk trade. And so in reality, we're just going to see what happens in the next coming days. But as of right now, if this starts to break out, one starts creating short-term higher highs and falsely breaks that low, that starts to tell you that, you know what, you should start looking for rallies back to the tops and potentially even higher. If we start to break out, creating a continuation pattern, that's your trade. If we don't, look for a pullback to this low again, start running it to the downside if you did not get into the trade already. This is not something that you want to re-enter now if you're not in, just because of the formation here. And so be careful on that. Pulling it to USD CAD, guys, on the monthly time frame. I know I went over this. This has been a pain, a pain, a pain. I can't stress how much this has been a pain, right? Now, we shouldn't be surprised that USD CAD has been such a pain of a pair to trade, simply for the fact that that 130, 129, 130 handle is one hell of a level, right? And the bears on USD CAD, they govern that bad boy, right? And so, it's understandable on why it's so like wicky on that area, but at the same time, it's been such a pain to trade that it hasn't been anything that we have been interested in. And so just to look at the longer time frame, guys, real quick, where is USD CAD going to be moving? That's the impulse. This is the relief, right? We see continuation, and now we can see that we are in somewhat of a similar structure. And so within that, and I went over this with, is Joe in here today? Joe is in here. Shout out to Joe. So Joe and I went over this structure today, and I was like, do you notice the impulse within the impulse? And he was like, yeah. He goes, I see the initial impulse, and then I see another impulse right here. And this is another relief, right? And so we do have an impulse within an impulse. And so the question is, are we going to get one of these? It's possible, because structure is definitely setting up for one more continuation push to the downside to break the lows. The question is this going to be the flag that gets all the way down, right? That potentially could happen. But if that doesn't happen, right, then what we're going to look for is to run it to here. And then once again, does it create a reversal pattern? Does it create a continuation pattern? If it starts to, create a reversal rather than continuation, you're going to look to run that back up. And then we expect one more drop to the downside, rejecting one more time that 129 handle, creating a lower high, and one more drop. We are expecting the impulse. The question is when. And so with that, guys, my suggestion on USD CAD as of right now, that is not a pair that you guys should be interested in trading, right? It is, very aggressive as of right now. I wouldn't be interested in trading in something like that. You can just see that all the rejections that we get within that 128.62 handle to 129.16 handle. And so with that being said, my suggestion is this. You see an impulse and you see this small term flag, right? Even if this starts to break down, that would be warranted as a very high risk exposed trade, just because of what we're dealing with in here. You can take it, and that is a possibility, but in reality, your golden trade is below that low. And there you go, followed by short-term continuation pattern. And that's going to be your trade all the way down to that weekly ascending trend, which does coincide with this previous low of this impulse once this range did in fact break. And so that's most likely where we're going to be targeting the structure. Pulling it to a 4-hour time frame, guys, we can see here once again that you could have taken the short-term sell on the 1-hour time frame, get entries within here, stop loss above here, and try to run that down. That's the only sell trade. But if you guys are going to base it off of that ascending trend near there, like I said, this trade right here is very short-term, very, very, warranted a higher risk. And so you want that, you want to see that, and that is your trade all the way back to the downside. Now look, if in fact this starts to decelerate near here, create that reversal pattern, right? Once that in fact does start to happen, right? Once these short-term higher highs break, that is a potential buyback to the upside. But remember, higher risk again, because you are range bound and there is a tremendous amount of wicks and things of that nature. USD JPY, guys, right? We've been saying this for the past 3 weeks. This whole bullish momentum to the upside should be treated as correction as short term, simply for the fact that, we are still expecting downside in USD yen, right? We understood why everybody was bullish in the beginning, right? You saw this initial impulse, then you did see a big push to the downside after that low got broken, right? But what happens after? You see another impulse, and you see another relief with a strong base being formed, which is understandable why people were saying we should rally back to the upside. But when we in fact did break back below that low again, it tells me this impulse becomes valid. Therefore, this is treated as relief, and we should expect continuations. One more to the downside on the 101 handle. Then we're going to expect that to start rallying back up, and we're going to expect one more to the upside, making this a very big term correction for the yen for future depreciation on the currency. And so looking at it as of right now, we are still expecting continuation to the downside. Like I said, guys, our goal in the end of the day was to tag the tops of that weekly descending trend, and from there start looking for rejections and start looking to take this trade back to the downside. US dollar yen is setting up for a beautiful sell to the downside, probably one of the few pairs that is setting up for that. And so with that being said, guys, let's just pull some short-term fibs on this to kind of see how we could potentially take these trades. And so we can see here, we did have, in fact, broken consolidation, which we can see as of right there. Let's get that on the base for you guys. Okay, so yen as of right now, guys, looking at it and what's going on. So looking at yen as of right now, we can see that we have that impulse, did have that relief, and that's been the yen's behavior this entire time. Then we do have another impulse. The question is, if this base starts to hold, you could expect one more rally to the upside, right? You knock that. And why am I saying that? Well, this is a previous high that could potentially create a higher low. From there, if this flag does break out, that could expect one more rally to the upside. And then from there, you're going to look for some type of deceleration or reversal. And then from there, expect to sell that straight back to the downside, right? And so looking at it as of right now, if that doesn't happen on the daily, once this low does in fact, or this high/low does in fact break, you're looking to run that back down to the weekly support, the 108.646. And once that in fact does break, that is your big buy sell back to the downside. So I'm pulling it to the 4-hour time frame, guys, just so you guys can see that in a simpler stance. We can see here that yen is in fact breaking out. Like I said, if you guys caught that entry in here and you guys didn't care about the trend, shout out to you guys. But the way I'd be taking this, let's pull to the 1-hour time frame right now, and let's even get rid of that consolidation box just to make the chart a bit more clear. And we can see right here that we do have a false break of the lows, or the high/lows. We do have an initial impulse. We do have relief. Once this low, in fact, does break, that is your short-term sell all the way back to the downside, stops and move to break even. And your goal is to run that back down to the weekly support and nothing more, right? Now, once again, guys, if that, in fact, does not happen, and let's say this does, in fact, break out, creates a double bottom, starts to decelerate. Once you see a strong impulse followed by some type of continuation, that could be a false break and run it straight back to the upside. But as of right now, we are not expecting that. So in reality, once this breaks out, that is your trade all the way back to the downside. Pulling it to GBP US dollar. Shout out to you guys who got this trade. I missed, unfortunately, signaling it last night. I got the alert at like 3 a.m. I'm going to start. There are a lot more features, guys, now coming with the group chat and signals. And so I'm really excited to release some updated alerts, right? Theses, etc. And so GBP USD, there was a trade last night. We will review it. Unfortunately, we did not able to take it. I know some of the students in the training course were able to get in on that trade, so shout out to you guys. But looking at structure as of right now, let's look at its behavior. You see an impulse, you see a relief, you see another impulse, and we're in another corrective stage, right? So the question is, are we getting another one of these? I think we'll return back to the lows, but the question is, when are we going to return back to the lows, right? And so looking at it from a weekly time frame, we definitely can see that pound dollar is not slowing down as of right now. We are expecting it to tag the 132.09 handle, so we got about another 140 pips, give or take, to get there. But one thing do take into consideration is that this is an impulse, and that is not forming a continuation pattern, but a reversal pattern. So I bet you this tags, slows down, rallies back up near here, starts to create. That's your trend. This will be treated as relief, and you expect one more leg all the way back to the downside. That's most likely what's going to happen on pound dollar. But one thing again, guys, is that this entire structure over here has not been tested, right? And so what we are expecting for at some point is, when is this structure going to decelerate, break out, test there? We will treat this as relief, and then from there expect another impulse back to the monthly support. That's the question of when we are going to get that, right? Now the pound trade that was signalable last night's signalable. I don't know if that's a word. Was signalable? That's not a word. That's definitely not a word in the English vocabulary. That was able to be signaled. I don't know. The pound dollar trade that was able to be taken last night was, we did have this initial impulse followed by this flag. I had an alert sit within here, and so if you guys got an entry within there, right, then shout out to you guys. Stops we move to break even when you get to the lows, and give it a shot to break back down below. Right now, pound is definitely showing us further continuation to the downside. Most likely we can expect pound to come back to this previous low to create a lower high, creating that the descending trend line. And then from there, once it breaks out, that is another continuation trade all the way back to the monthly weekly support sitting at the 132.20 handle. Now, one thing to take into consideration is that something like this will probably take until next week, just like you can see how many days it took for pound dollar to form these consolidated flags. And so probably Sunday, Monday, Tuesday, you'll see that going into play. Now, like I said, guys, the only bullish bias is if we're going to start breaking falsely back above that previous low, some type of continuation pattern, and then from there you're going to run that back to the upside, warranting that as a short-term trade, higher risk exposed, etc., because the momentum is still descending. And until that handle around the 135.80, 136 handle gets cracked, you are still poised for downside. But as of right now, looking to sell that, and that is your trade all the way back to the downside. AUD USD on the daily time frame, guys, have not broke the lows yet, right? And so told you, we did say, guys, be very careful of this area. Monthly broke the lows, but you have to remember, once again, you got to look between the lines, right, and look left. Can see a lot of rejection that has occurred within this area, and so you want to be very careful. One thing do take into consideration is that AUD USD is poised for further depreciation once that in fact does break, and we are expecting another big drop, definitely back down to these previous lows, that creating a head and shoulders, and that being the neckline as of right there. And so as of right now, AUD USD, we are expecting that big drop, but the question is when, or what's that? I don't know. When are we going to break these lows, right? And so these past couple of weeks do speak a lot here. It speaks a lot of volume. It talks about a lot of deceleration and a lot of exhaustion. You know, with that, as of right now, if AUD USD does start to close back into the 74.90 area to 75 handle, then we are going to start warranting AUD as a potential reversal bound for continuation back to the upside. Now, the question, guys, is, once again, are we just going to come back here? Is that going to be treated as relief? And do we start cracking back to the downside, making that short term? Or are we, in fact, going to make a strong enough impulse to the upside, followed by a pullback to see continuation back up? And so one thing to take into consideration as of right now is AUD USD will be treated as short term and will be treated as higher risk exposed until we do in fact first break back above that 75.80 handle, which does govern the monthly support. If it doesn't, this is all treated as relief for further continuation back down. But if you see that impulse followed by continuation, you are rallying that back to the upside. But like I said, guys, it's not a big buy until you do see the break of that 77.84 handle, and then from there you can start looking for continuation back to the downside. One thing to look at right here on the smaller time frames, guys, and let me get rid of these green lines for you. Oh man, these green lines. One, and that's two, right? Yeah. Okay. So looking at it as of right now, you can see a potential completed inverted head and shoulders pattern, that being the neckline as of right there, false break number one, right? But one thing to take into consideration, do you have an impulse? Do you have a relief? If that breaks, that is probably a given all the way back to that descending trend line. But remember, guys, you are treating this as short-term or higher risk exposed until we do break out because of this initial impulse to the downside. And so the question is, you know, when we get to here, do we start to break out, or do we in fact break back above, right? Now, the one thing is the sell is not warranted until you break that 75.10 handle. If you see that, followed by that, then from there, you can run that back to the downside, stops and move to break even. That creates somewhat of a head and shoulders pattern, the trend neckline being the neckline. Last but not least, New Zealand dollar. As of right now, same concept like AUD USD, poised for still depreciation, with that being the impulse, this being the relief. Once that breaks out, we're going to expect continuation back to the lows. Now, the one thing, though, is that Nzdusd USD is still, you know, in an ascending movement, but the question is, are we going to break this 62 handle? And that's really what I'm going to be interested in seeing, right, is when are we going to return back to that trend? And that could potentially be once we break near here, right, could start wicking below there. So will be interesting to see from the smaller time frame perspective. But looking at it as of right now, until that 68 handle does get in fact broken, you are not going to see any more downside in Nzdusd USD. I don't care if this is the impulse. This is the current impulse, therefore this is the last low of that ascending trend. So if you saw that, then you'll get that. But if you don't see that, you're not going to get that type of trade. And so as of right now, just like we said on AUD and all the other pairs, if you start to see pairs start to reverse or start to slow down, right, once they start creating short-term higher highs and they start showing potential continuation in the other direction, right, you want to start looking for those patterns, start running them back to those previous lows. Once again, we don't know if we're going to treat this as short-term relief for another downside play, right, or are we going to crack the tops, potentially make a nice bull run. And so you want to be careful on those plays, right, because you just don't know the duration of when they break out and how long they're going to break out for. So let's say that we are breaking out as of right here. Let's pull these extensions near here. And there we go. And so looking at it as of right now, the 23.6 would be the only way that I'd be looking for buys, right? You do see an impulse. You do see a reversal pattern. Once you see that, followed by that, your goal is to run that back to the 72 handle and then no more, right? Because that could just be a structural retest for another continuation back to the downside unless we, in fact, make a sharp move, continuation, and etc. 4-hour time frame, guys. Looking at it as of right now, we can see that New Zealand's in a very tricky stance. Reason being is because there's really two ways that can go about, right? You do see this initial impulse that is formed right here, but then we do get this reversal pattern, right? So now you do see that potential bullish movement, but now let's look at it. That's the impulse, right? So therefore, does this potentially become the relief for continuation back down? We won't know until those lows get broken. We can see a potential head and shoulders pattern there, this being the neckline. And so this is really what's most important. Remember that 68 handle is what's going to warrant that huge impulse to the downside. But if these lows don't get broken, you want to see another breakout of this. How about that? You can start running that back to the upside. But remember, guys, it is not a big buy until we do, in fact, crack that 70 handle. Once you see that, sorry, by that, that is your trade back to the upside. So safest buys plays on this is above and below. And so with that, guys, that is what I wanted to go over in reference to the dollar pairs. And so what I'm going to do now is I'm going to be going over all the dollar pairs one more time just for the next 24 48 hours for you guys to see how they're going to break down in a very simplistic fashion. So I'm just going to get a sip of water, and then from there we will get into the questions and answers. All right, guys, so let's get right into it. Here we go. So looking at euro to US dollar on the 4-hour time, on the daily time frame as of right now, we can see that euro US dollar is showing no signs of relief or exhaustion as of right now, but we can see that we are in a very critical area, and we do want to see how this is going to be forming out, right? Is it going to start decelerating and forming some type of reversal pattern, or are we going to see further continuations to the downside, right, by impulsing below that monthly support, that 117.12, and from there showing continuation? Now, pulling it to the 4-hour time frame, guys, as of right now, we can see that euro to US dollar is starting to decelerate or is starting to slow down. And so there is going to be 2 possible scenarios. We can see an initial impulse that was made to the downside, followed by relief. We do see continuation. One thing to take into consideration is that it's not continuation, but that is warranted as a reversal pattern. And so with that being said, guys, it's going to be very interesting to see what structure does within that area. If we do start to falsely break those lows and break back in, you could expect for some type of small continuation pattern and run that back to the tops. Stops would be moved to break even, and that would be a short-term buy. Remember, the big buys are not warranted until you do see a strong enough impulse to the upside above that 119.40, followed by some type of pullback, and then from there, once that breaks, that is your big rally back to the upside. Now, the sell is only going to be warranted if you are not in the sell already. If this pulls back, creating short-term relief, once that breaks out, you're running it all the way back to the monthly support and potentially even past. Once you get to here, stops and move to break even, and you give it a shot. Looking at USD CAD on the daily time frame, like we said, guys, we're in a very choppy area as of right now, as that 129 to 130 handle has been regarded as a very, very strong area for the sellers, being able to grab a tremendous amount of pending orders. And one thing more importantly is you do want to factor in the weekly time frame and what's going on with structure. We do have that impulse, we do have that relief, we have another impulse, and we do have that another relief. So the question is, are we going to be getting this trade once again, right? And so we can see within the smaller structure, you do see an impulse followed by a relief. And so if this does break out, the question is this going to be the big sell to the downside, just like we saw back in May of 2017, right? Or is this start going to decelerating and pulling back to the trend? And so that is the big question. But as of right now, we are still sell bias on US dollar CAD. And so looking at it as of right now, we can see that we did have an initial impulse and we failed to warrant a continuation pattern, right away of rejecting these previous lows. But we can see here that structure is now in fact creating somewhat of a short-term bullish trend, this being the low, this being the previous high, and this being the higher low, right? And so with that being said, it's going to be quite interesting to see what USD CAD does with this initial impulse as well, followed by this area of profit taking. And so looking at it from a 4-hour time frame perspective, we can see, guys, that we do have a couple of things going on. First and foremost, we do have this ascending trend being formed as of right now. Secondly, we do have this impulse here. And thirdly, we do have this short-term ascending trend that was just broken, followed by lower lows that were formed. And so with that being said, most likely structure will continue back to this ascending trend. And the question is, do we break, in fact, those lows From there, followed by create a continuation pattern and expect that big trade all the way back down to the weekly support. Is that going to happen? That is a big possibility. Now, if we do start to slow down in this area and start to create a reversal pattern like we did in the past, then we're going to look for short-term higher highs, followed by a short-term continuation pattern and looking to run that back to the upside simply for the fact that you guys want one thing. And so being said, until we do in fact break the highs or the lows of that range, you're simply playing within it. Looking at US dollar, Japanese yen from the daily time frame, just like we've been saying on the past weeks, this has been treated as correction, and we are still expecting continuation back to the downside, right? And so any bullish movements to the upside would be treated as short term. As of right now, we can see structure is attempting to test that previous high that it did break, potentially creating a higher low, right? And so there are a couple scenarios that can take place. One thing do take into consideration is that we are now seeing rejections of that previous 111 to 112 handle, and we can see in the past that was a very strong area of support, turn newfound resistance, and so we can see that there were a tremendous amount of pending orders sitting there, which the sellers were able to grab and take out the buyers. And so with that being said, a couple of ways US dollar, Japanese yen is going to be playing out. As of right now, this is the current trend that we are in. Please be aware that the US dollar, Japanese yen is not a complete sell until we do in fact crack that 108.646 handle. With that being said, this is creating short-term continuation pattern. Once that does break, that is your short-term sell back to the downside, right? If that fails to happen and you do start to see a false break back into that previous low that we did in fact break, then from there that becomes your descending trend line. And once we do in fact break back above that previous low, warranting another false break, followed by a short-term continuation pattern, you could run that all the way back to tops, being this a short-term bullish momentum play. Once you get to the top, stops and move to break even, and you see if you can give it a shot all the way to that descending trend line. Failure to do so may just warrant consolidation within this area, and that is not something that you guys should be interested in doing. So once that breaks, really in reality, it's which way is the structure going to break. As of right now, you do that, have that initial impulse, and so most likely the sell is more likely to happen than the buy, but we will trade what we see, not what we think. Pound dollar, once again, guys, we have been stating that this is creating somewhat of a reversal pattern after that initial impulse was made, followed by that type of pattern rather than a continuation pattern. But one thing to take into consideration is that structure is not showing any signs of deceleration as of right now, but potentially could be grabbing some bullish orders for potential big rally back to the upside, going back to this previous low, then from there warranting that as relief for another drop all the way back to the downside. You guys have to take into consideration the longer time frames, especially looking at it on pound dollar right now, simply for the fact, guys, whoops, now I'm losing all my structure. So you guys do have to take into consideration the longer time frames, guys, and looking at pound dollar and saying, okay, well, what is going on with the nature of structure? And we can see it does start with an impulse followed by a relief or liquidation, and then from there you do see a continuation of that impulse, and from there we can see we're in the same area. One thing to take into consideration is that this trend did in fact just break, plus that previous low did in fact break, creating lower lows. So I'm not surprised that pound just continues to drop, because that is what structure is telling us that it should do, right? The trend is our friend. And so looking at it from a smaller time frame perspective, right, we can see that pound dollar is in a very critical area with this initial impulse occurring, this being warned as a reversal pattern or profit taking, or just a very decelerated, slow descending channel. One thing that we did state was that low, in fact, did need to be broken for us to see continuations down. We did, in fact, miss that previous sell, and so shout out to you guys for whoever was able to get it. And so you are, in fact, seeing another sell setup. Once flat pound does break out, you do have one more sell to the downside to the 132.20 handle, and from there, you guys really do want to see what does it start to do. Does it create a continuation pattern, or does it start to create a reversal pattern? Looking at, guys, AUD USD on the daily time frame, very interesting scenario. As of right now, we can see the false breaks occurring near that daily support as of right now, and so we can see that after that initial impulse was made, we can see that we were in a reversal formation, and so as of right now, we are creating short-term higher highs, with the daily retest being a pin bar, bullish hammer, whatever you want to call it. And so with that being said, looking at it from the smaller time frame perspective, we can see that AUD USD does have some potential to go to the upside to that daily descending trend line. And so as of right now, there's really going to be two ways that AUD USD does play out. Since we did in fact falsely break these lows, right, we can see that we did have this initial impulse to the upside, followed by short-term relief. If we do in fact break out and potentially create a small-term higher highs, you could expect one more rally to the upside, creating this a short-term bullish run. Please note that this is not going to be a long-term bullish run until you do in fact see that 77.85 cracked. Once that is cracked, followed by a short-term continuation, that is your rally all the way back to the upside. Right now, if that fails to happen and this gets capped out, really in the end of the day, your ultimate goal is to wait for this head and shoulders pattern to break out, this being the neckline. Once you do see a sharp move followed by a short-term continuation pattern, you could run that all the way back to the lows, this being short-term once again, or higher risk exposed, because you need to take into factor that you are range bound, and you need to take into fact how extended this entire structure is. Last but not least, Nzdusd, looking at it from the daily time frame, very similar to AUDUSD, we can see that we do have a very sharp impulse to the downside, followed by short-term liquidation or profit taking. And so there is a chance that Nzdusd can in fact tag these previous lows, but we are not expecting any continuation besides that until you do in fact see a clear break below that 68 handle. And so looking at it from a 4-hour time frame as of right now, this is definitely setting up as a beautiful sell setup unless you do see higher highs being created. That is your impulse. This is your relief after that short-term reversal pattern did in fact break out. And so if this does in fact start to break out, you could have a potential short-term sell all the way to the lows, and hopefully you start to run it all the way back down. But the safest play is going to be breaks below the lows. And from there, once that breaks out, this is going to be your run all the way back to the downside. Now, if that fails to happen, you guys want to be very weary of that 69.34 handle. And if Nzdusd does in fact break out, creating short-term higher highs, followed by some short-term continuation pattern, could potentially have a short-term buy back to the daily resistance and weekly resistance around the 70 handle. Please note that Nzdusd is not warranted as a buy until we make a sharp enough impulse above that 70.41 handle, followed by some sort of continuation pattern, and then from there you could expect a rally back to the weekly resistance. And so with that, guys, that's how you break down the dollar index pairs. I hope you guys enjoyed that. And so, guys, that is what I want to review in reference to the dollar index pairs. That was a mouthful. I had a blast going through that. And so now, guys, I am happy to take any questions or answers that you guys may have. And so I'm going to be on for the next 15, 20 minutes or so, and then I am going to have to jump off, guys, because I do want to get some dinner before live training at 6 o'clock. And so shout out to all of my full volume training course students. You guys are absolutely incredible. And so, yeah, guys, if you guys want to go and ask any questions that you guys want, absolutely. Jose Legend, do you have a microphone, boss, that you can unmute? Is that a possibility?
All right, can you hear me?
What's up, Jose? How's everything?
Hey, what's going on, Albert? So yeah, I have a question for you. Could you talk about correlations like dollar index, the euro index, and do they really affect the euro pairs and the dollar pairs? Just in correlations, you know, oil with gold and things like that.
So, are you asking more, Jose? You know, how much of an effect does, let's say, the correlations have on the given currencies per se?
Right, like when we're doing our analysis,
right?
Do you look the correlations and depending on the analysis, viewing correlations, do they take like do they make a big part of your buying and selling decisions?
Okay, so first and foremost, what do we say about in the course, Jose? What do we say about correlations? They're just mere what?
The correlations, they're
mere indications.
They mirror, right? Exactly. Right, exactly.
And so in the end of the day, if the word indication is in something, right? Like when we teach the course, right? The foundation is the most important thing in understanding how you approach, your analysis. And so when looking at correlations, personally, I don't really care too much about them. I offer them and I put them in the course because, like I said, in the end of the day, I want everybody to have as much as they possibly can in reference to information. And so if you feel it's necessary to have them in there, then by all means. Right now, do I personally use them and do they affect my viewpoint? Absolutely not. I am ideally looking at, when I'm trading dollar, right, or dollar pairs, I'm not just looking at the index, right, but I'm looking at pairs across the board. And I'm saying, okay, how are pairs across the board setting up, right? Because if 5 out of the 7 pairs are poised for upside and 2 out of the 7 pairs are just looking like they're consolidated or they look like they're going to move in the other direction, it tells me something economically in the 2 out of the other pairs is potentially forcing that, right? And so ideally, when you're looking at the correlations, you shouldn't care too much about them. You can use them for added confluence, but correlations are only as important as as they're used in their own, economy. That's why, for example, like Canadian dollar is so reliant on oil, right? Because it's such a main factor
Right.
in their economic structure, right? Dollar can give two
Correct.
damns, right? And so ideally, that's how you want to be looking at it is, in the end of the day, we trade what we see, not what we think. And so, structure is creating lower lows or higher highs or whatever, right? Regardless of what the correlation
Right.
tells you, structure is telling you pull the trigger, right?
Right.
Does
So
that make sense?
structure is way more important. Price action, the chart, the formation,
Right.
all of that is way more important than just correlations.
Precisely.
Correlations just they're like they're a minor part.
Precisely. Like Jose, did you watch some of the webinars, or were you on the webinars these past couple of weeks?
I think I went to the last one. I
I
think.
think you were on the last one. The reason why I'm asking is because remember, what was I saying about, all the dollar pairs? And I was telling everyone, and I was like, yeah, you want to be careful with dollar pairs because they're extended and they are, I was very, adamant on we should be getting a reversal soon, right? But what did I tell all you guys? Regardless of what I think, if structure is moving in a direction, you got to move with it, right? It doesn't matter, for example, like, EU right now, we look at it and like, you look at it, it's like, okay, well, you have an impulse here and now that looks like a reversal pattern, right? And so, and this creating an inverted head and shoulders, oh, let's start looking for the buy, right? But where's all the momentum still, Jose?
You're still down to the downside.
So ideally, what type of trade should we only be looking for still?
Sell only.
Right. So it doesn't matter
position.
right. It doesn't matter if I'm saying, well, this is forming a reversal pattern. All it's telling you is, if you pull that trade, Jose, just know you're putting yourself in a higher risk environment. And so your goal is potentially to move your stops as quickly as you possibly can to mitigate the risk that's exposed to you. Right. And so, that's the only thing that we're taking into consideration. Structure is the most important thing when it comes to taking your approach to trading. It's just, what is price telling you? And as we say it in the course, right? Let price prove to you it's going to move in the direction that you want. That's all you care about. Is price screaming to you, Jose, that it's confirming or not? That's all you care about. You know what I mean?
Okay. Sounds good.
Does that make sense?
Sounds good. All right. Thanks a lot. Yeah. Oh, yeah. Love it, man. Thank you.
Always.
I appreciate it.
If you need anything else, always just let me know.
Okay. Thank you.
All right. Let's go through these messages. What's up, Kai? I don't know. Signal. What was the word I said? Signaled. I don't remember what the word was. That was tongue twistering, but someone said it's totally a word. And then Jose was talking about UJ. Oh shit. Nabil, I'm so sorry. I'm so sorry. I'm very sorry, Nabil. I'll send you a message, legend. I'm really sorry. I'm gonna send you a message. Okay. I'll give you GJ. Nabil wants GJ. Do you want to share your screen or you just want me to break it down and you want to put the mic on? Up to you, brother. Whatever you want to do. And then I'll bang out gold. But I'll do it, Nabil. I got you, boss. GJ. Let's do it real quick. No analysis, just price action. Right. In the end of the day, guys, like I was telling Jose and telling everyone else, you don't need fibs. You don't need monthly, weekly, daily. You don't need any of. If you understand price action, you're golden, right? Why do we use fibs and why do we use levels and things like that? Just mere indications to tell you that they're right. It doesn't matter in the end of the day. It just matters in which way price is going to move. And so we're looking at GJ as of right now. We see an impulse and we see a relief, right? And more importantly, let's zoom out a little bit more. And it's like, okay, well, we see this descending channel here, right? And then so that's kind of the environment that the pound yen's in right as of right now. We do see this base here. We do see this initial impulse, and so we are definitely poised for downside. Your goal in the end of the day is to run that all the way back down to the lows, and that's your ultimate goal in reference to GJ, right? And so looking at it from a weekly time frame perspective, let's see what's going on. Looking quite good. What do we see here, guys? Well, we see rejections of these lows, right? And more importantly, what else do we see? Well, we do see that looks even better, guys, right? Because what are we having here, right? So what do we have here, right? We have a last kiss pattern, right? And then from there, we do also have an impulse relief, right? And notice this, now we are seeing continuations of that. But as I've told Nabil and many other people, until until that cracks, that is not your trade, right? Why am I saying that? It doesn't matter what the longer time frames are telling me, what's currently going on, right? What do we see? Impulse. This could be treated as relief. That could break out back to the upside if this doesn't break, right? And so looking at it from the daily time frame, you wanted to see a daily crack below that. Did we ever get that? Nope, not yet. So I would take it in two ways. If you missed this trade, if you didn't get the trade within here, now you got to wait. Because even if this pulls back, that's not enough room to work with. You're confined, right? And so in reality, now you got to wait for, what's that? Now you got to wait for, do we break this region? So for me to take GJ, it's got to be boom, boom, and that's your trade all the way back to the downside. So Nabil Legend 4H, just so you can see it clear. You got, trying to figure out where I want to pull this trend from. I got to tag these highs. So let's say this is your trend, just for example purposes, Nabil. If you pull back to here, you could take that, run it back to the downside, close there, right? This is a short-term flag as well, but it's very risky. Actually, if you see continuations to be below that level that I just highlighted, you could take that. So, okay, this is even better. Here we go, boss. Ready? Let's do this, Habibi. Here we go. So you got one, right? This is your ultimate goal. If this breaks, this low breaks, golden. That's your trade. You're done. Close that. Or try to hold it all the way down. Now, if it doesn't break and this starts to flag out, do not take that buy, right? Why go against this? Don't take that. See what it does. And once that breaks out, see if it starts coming in line with this, starts to create a lower high, and then starts to crack out. Two ways. Two ways. Don't take the buy. Don't take it. Don't take it. Don't take it. Don't take it. Just take the sells. Does that make sense? Let me know if that made sense, Nabil. Jose, what were you saying, Legend? Helps guide your. Did you want to mute your mic, boss?
I was just thinking, what do you think about the Chinese yuan with their petrol offerings now? You know, in a lot of countries like Iran and Russia and certain other European countries are buying Chinese oil now and kind of trying to deviate from the U.S. dollar, U.S. oil. So if like more countries along, 2-3 years from now, more countries start doing that, because supposedly China is saying that you buy oil from us, we back our oil with gold. You know what I mean? Which is pretty strong investment there. It's a no-brainer. So I mean, what do you think?
To be quite honest, and I'm just being blunt with all you guys, I think we're doing some really wrong in our economy right now. I think we're making some really wrong decisions and some wrong movements, in my perspective. And one of the things that I think is the scariest thing of all, economically speaking, is that a lot of countries now are starting to understand that, the U.S. doesn't need to be reliant as the main power, right? And it's time that, the reliance of the U.S. is no more, right? And that becomes very scary economically, not for us traders, right? Because we can work anywhere in the world, right? But for the people of our country. And so,
yeah,
looking at it, it's tough to say what I think about it right now because we're just getting in action. And so for me to, stress my opinion on it, it's going to be quite tough because I don't know the outcome of this, right? Because you have to remember, we've been on we've been on X economic structure for such a given time, and it works for the most part, right? And so, the scary thing or the interesting thing now is we're shifting into an economic society that our world has never seen before. And I have no idea how we're going to be able to make up for such a way. And so when you bring into, the reliance of the currencies now and then kind of the main commodities that drive most of these economies, right? It's very
exactly scary. Like oil.
You know what I mean? So what do I think it's going to do?
Sure is, because oil's.
Go ahead, Jose.
No, I'm saying, yeah, you're right, because oil's the the world's highest trading commodity in the world. And so, I mean, that's what brought that's what gave the dollar its strength, oil. You know what I mean? And now that this is going on, everybody's saying, hey, you know what, the dollar can definitely lose its strength.
But you have the one thing, Jose, you have to take into consideration is that value, in my opinion, in today's world, it's all hypothetical. It's all hypothetical. For example, why is Bitcoin valued at what it's at? Not because the technology is worth that. But there are companies out there that have way better blockchain technology than what Bitcoin's up. Why is Bitcoin, regarded as one of the highest values out there? You just said Amazon is the number one company in the world, Jose, or one of them. Some would argue number one company in the world, right? So I would say, well, why doesn't it turn a profit? Why is it in the red, right? How could a number one company in the world do take into consideration that they do reinvest all their cash into R&D and they're only focusing on their consumers in the end of the day? But, it is concepts like that. It's what we put the value on. You know what I mean? And so if all the big around the world start deciding to hypothetically devalue the United States, we're screwed. Because just in reference to, advancement of what we're doing here in our economy, it's nowhere near as close as, what Russia's doing, what China's doing, and things like that. So we're not in the best environment. But in reference to what I think is going to happen, it's tough for me to give an outlook right now. It's tough for me to give an opinion because I need to see the results of some of it right now. And I need to see, kind of how we respond, right? Well, what do we do?
Yeah.
But in the end,
it looks like we're going to have to wait and see. We're going to have to wait and see then.
Right. And in the end of the day, we just trade the markets as it goes along, right? Might have a little bit more of a jumpier market, but we will wait and we'll see what's going to go on. But it's just, as Nabil and I, we talk about it all the time. It's not based on true value anymore. I think it's all psychological, as Nabil would say, or as I would say. It's all hypothetical, but it is what it is. It's why Starbucks proved a cup of coffee for $5 instead of $1. So
yeah, that's true. That's true.
And their coffee's burnt.
All right, thanks.
Always.
Yeah, it is, and it gives me a stomach ache every time I have Starbucks.
All right. And then, so who's got the next question? Oh, someone was asking about gold, right? Yeah. And then I got about 10, 15 minutes left, guys. Then I got to run off for like 5, 10 minutes because I got to get some food before we do live training. Gold. Any of my students in here want to annotate on my screen and bang out the whole thing? Anyone can do it? Who wants to do it? Who we got in here? I know I got a bunch of my students here. Anyone want to bang it out? Just do annotations? Who wants to do it? Or I got to do it. Anyone want to step up to the plate? Someone step up to the plate. Later in the B, I'll send you a message, brother. Someone step up to the plate and bang it out. Come on. It's not that tough. Who we got? All right, I'm going to take Joe out of this, and Joe's just going to type it out. All right, here we go. Nabil's got it. 1307 is major support. Currently consolidating. Wait for a break. Let's see. I'm just going to use Joe. Actually, you guys should be able to see it better. Come on. Someone's got to be able to break this down. It's a very simplistic structure. Anybody got it? Who wants to do it? All right, I'll do it. Because no one's stepping up to the plate. All right. Here we go. You got the impulse, right? Relief. Breakout. Lower lows. Impulse becomes invalid now, right? So what happens? You got that impulse. Reversal pattern. There, it's the reversal. The question, though, is, look, never created higher highs, right? So let's mark the ranges real quick. You got 1. We'll mark that as key. And you got false break, hello, right here. So let's see here. We broke, that became resistance. We broke, that became support. We broke, that became resistance. There you go. That is another key level right there. All right, so let's look at it now from a smaller time frame perspective. We have our ranges. We can break it down, ladies and gents. Okay. Impulse, reversal, impulse, right? And now, right, we broke out, etc. But let's look at it. Okay, now we're in a relief stage. Within the relief, we have this impulse. We have a bigger term correctional play, right? Just basically falsely broke this previous level right here, which you can see with all the rejections. 1, 2, 3, makes sense. Pulling it to the daily time frame, what do we have here? We got one key level that broke, right? What broke it in fact, and you got resistance right there, right? And then you do have that. Okay, I just broke it down for everyone. Can someone break this down for me right here? Who wants to do it? So what do we have here? We start with what? Who's got it? Start with an impulse. Then what do we get? We get, right? Then what do we get again, Chris? Not, right, you get an impulse, and now what are we in again? Relief, right? And so what does that start to create, Chris? See how that creates a trend? High, low, high, low. So how are we taking this trade now, Chris? So what's going to warrant the trend? What's going to warrant the continuation of the downside? What do we think? Break of lows, right? Why the lows? Why do we need to break the lows? What do you see here that's so important, Chris? Right, right. So once you cleanly clear this, followed by what type of pattern, Chris? Continuation. Once that creates a short-term lower low, retest, etc. Entries there, stops are above the high. Give it a shot. Stops move to break even when you get to the lows, and that's your trade. You see that? That wasn't too tough. Chris stepped up to the plate and he held it down. You know what I mean? Shout out to you, Chris. So whoever was asking about gold, that's your trade. Now, Chris, real quick, because Chris is the one that's working with me right now. Legend, if these lows don't break, where do you think we could, let's say it doesn't break and it starts to slow it down. Where can we expect price to, pull back to? All right, you see the behavioral analysis, right? So if this pulls back, and just what does this create now, Chris? Just a bigger what? It creates a bigger relief. Oh, yeah, exactly, my man. A correction for continuation back down. Yes, 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 yes. That's what I'm talking about. Well done, boss. And so I will see you in live training, brother. And so for those who don't know what live training is, basically for all my students, back in the day, how I started real quick, and then I got to run off and get some dinner before we get started. But basically how I started back in the day, guys, was I offered one-on-one training, and it got so intense where I was basically doing 18 to 20 hours a day. And so I kind of had to separate the two. And so what I ended up doing was I bumped up the one-on-one training just to make it more of a premium price, as well as I created the full volume training course for those who want to learn on their own and so forth. But the way that I was thinking, well, people still need that one-on-one interaction. I was like, how do I supplement that? And so what live training is for the people who are part of the training course. Once a week, we host Zoom calls, which basically it's a workshop for an hour or two where students of the course can come on, talk about anything they want to talk about, go over trade ideas and stuff like that. And so that's basically what live training is. We have them once a week, and they're really awesome, really beneficial, really effective. And yeah, I truly believe if you're going to learn from a course, you got to be able to learn from the man or woman who's teaching you directly, right? Even if they sell you an online course, there's got to be some type of interaction or live interaction just so that you can pick their brain and ask questions and things like that, because you're going to come up with questions and you're going to be curious, right? And so it's a must, it's a must, it's a must. And so with that, guys, I'm excited for the live training. And so just wanted to say thank you so much for all of you guys to come out. Really appreciate it. Today's session was awesome. Someone asked if this is going to be recorded, and it is going to be recorded and uploaded to my YouTube. And so definitely go take a look at that. I also post the highlights on there, which is basically just breaking down the 6 pairs in about 8 minutes. And so the highlights will be on there as well, guys. And then besides that, guys, just want to say thank you so much again for coming out. I really, really appreciate it. Today's session was awesome. And definitely stay tuned for the next webinar next week. And so, guys, just want to say thank you so much again. If you guys have any questions or anything else, you guys can contact me at ThatFXTrader anywhere. Social media, that's my username on there. And so thank you guys again. Chris, I'll see you in live training. Real quick, who's going to be in live training? AK, you going to be in live training? Ash, you're going to be in live training? Ash raising his hand. Ash, you want to mute your mic? Ash, you got a mic? I just unmuted you. I don't know if you have a mic, Ash, but I unmuted you. I guess you're just raising his hand, maybe saying he's going to be there. But hopefully I see all you guys there. But anyways, guys, you guys have been wonderful. Keep kicking ass. Keep destroying the markets. Team's getting better and better each week. And so proud of all you guys. You guys are amazing. So hopefully I see you guys all in the live training. And yeah, have a wonderful rest of the week, guys. Be very careful. Tomorrow's Friday. Tomorrow Friday? No, tomorrow's Thursday. So we got some more time to trade. Be careful, right? Critical areas. And so make sure that you're seeing lower lows or higher highs being formed in whatever you're trading. But anyways, guys, have a wonderful rest of the week. Look forward to seeing you guys all soon. And I'll see you guys next week. So thank you, guys. I'll speak to you guys soon.